Hey, what's up, everyone? So it's actually been phenomenal in the market. So I'll be honest with you, there's been so much going on, as you can probably imagine. So many opportunities, so much to literally talk about. But without ado, let's jump straight into it. So this week I have got quite a bit on watch. Unfortunately, I haven't been able to trade this week. I mean, I did trade Monday, Tuesday, and I was able to pass a 100k FTMO assessment, which was pretty amazing. But all in all, yeah, it's one of those ones where just watching opportunities go by, but I'm still shadowing them and still taking them. Like today, there was this trade I had on watch, and I would have potentially, maybe actually now looking at it, been taken out for a break even. If it does come up a little bit more, but all in all, it doesn't really matter too much. I mean, there's so much opportunity. There was a CAD yen position as well. I would have probably got involved in as well, so I would have been running a decent amount of profit on there. And yeah, there was a few other pairs that I'll probably just go through, but ultimately I'll show you the three trades that I took that actually helped me pass my assessment. So what I'll pretty much do is we'll go over it now. So there was this one over here where we essentially had price coming back up into this area here, and I'll just replay the chart back to about there. So we had this sort of 1, 2, 3 sort of ascending channel into this value area, and then when we had that doji over there on the 4-hour, which is visible, you can even see on the daily we kind of wicked through it, came back. It was looking pretty good, and I think there was more than enough time to anticipate this sort of trade. So I saw it on the 4-hour and I saw the retracement back in, and this was actually the second trade I took on the challenge stage, so the first stage. But the first trade I took was this one over here. So I was anticipating this, but I didn't quite get it because for whatever reason, but then I did manage to catch the one just above, which was basically the small little bit of consolidation. And this one I actually got out for about 6% over here. It was actually a manual closed position because I wasn't looking to hold it much longer, so I was able to get out for 6, and then at that point there it gave me a 6% buffer on the account where I only need to get 4% more. And then when we did retrace back, as you can see here on the 4-hour and the 4-hour close there, that's when I was then looking for hourly continuation, and it was this position over here which I was able to then zoom in and get involved in. So then when we had this little bit of consolidation here, I was able to get involved just about there. Stop loss was just about here as well. I think it was around about 14 pips, 14 to 15, and then I got out for 4%, and that was it. That was basically the first assessment done. Now, in different case scenario, if I wasn't in an assessment stage, I would have held on to that and most likely come out for, give or take, a little bit less than that. I maybe would have come out for around about 2-ish%. So it doesn't really matter at the end of the day. It's just a systematic process that I'm following, and yeah, it was one of those. So I was able to capitalize on this, and this is what enabled me to pass that first assessment. And then the second one was on Aussie US dollar, which was let's bring it up, let's go back. So it was just over here. No, it wasn't. Let's have a little look. Oh, I'm zoomed backwards, that's why. So there we go. So here was the trade. So if I just go back to the daily, what we can see here is that we have daily momentum selling off, and we're looking at this as the target zone. So then when I looked at it on the 4-hour, I could then see that we had a little bit of liquidity sitting there. We just about near missed it, and I was waiting for price to tap into it again. And I'll just remove this off the board. And then as we saw it kind of tap into those areas, I was then evaluating it a little bit closer, and I was like, okay, you know what, this is looking pretty good. I just want to see a confirmation and a follow through. And then we had the push down. As soon as we had that push down, this is exactly what I was looking for. I was looking for a bit of consolidation. Now, on the hourly, it wasn't the cleanest, I'll be honest with you, so you couldn't really read through it. But when you go on to the 15, before we do that, you can see liquidity, near miss, taken out. Very simple, systematic, and we're looking to target these zones here. However, I wasn't looking to start reducing my risk, playing with the risk, just going to follow the process and continue what I was doing. So then I was looking at this point over here, and then that as the ultimate area of like, if it wanted to spike up any further, but I didn't see it so necessary. I just wanted to be in that area, but I would protect above it. And ultimately, as we broke above here, there was the aspect of kind of just drawing on something like that, where it was there, but more than likely I was kind of interested in seeing a rejection. So I set an order So it was kind of more of getting tagged in situation, and I put the stop loss above here, which you can see easily was 10 pips just above. Happy with that. And then I'm aiming to make around about 5% on the trade. Now the great thing about it is it kind of just plummeted off, and then that was it, trade done. So ultimately it was a fairly simple and easy win, because the nice thing about this is as I got positioned, I noticed that where I was looking to take profit was literally just around about this area. So the probability of it tapping into this and then retracing was there. So I was like, okay, I'm happy with this, because for the simple fact is I can get in for a 5-to-1 into that low, and if it did happen to just reject, it would probably reject from these areas because it is coming back down to something. So that was the nice thing about it. Now it did tap into the ultimate target down here, which was roughly running for around about 8-ish%, but at the end of the day it didn't really matter to me because it was effective just passing, and then that was it, it was done. Now obviously that seems very quick and very easy, but between all of that there was a lot of break even, there was a lot of kind of going back and forth. And when I say a lot, I mean, I don't mean a huge amount of trades. I just mean genuinely just missing trades because I didn't want to get into something because it was slightly higher risk, and then these and that. And I had to do a lot of learning during that period, because what was happening for me was I was not really trusting myself as much, but every week for approximately around about 6 weeks consistently, every week I had the same thought, and the same thought was, wow, I was so correct. Had I just held that position, or had I taken that position, I would have made 10%, etc., etc., right? And as a repetitive pattern, when I went back and looked at the missed trades or the trades that I did take that perhaps I mismanaged, and I'll go into that in a second, I realized that there was a commonality there, and the commonality was the lack of trusting my trade analysis. So previously, in the month before, the issue that I was facing was I was going a little bit too tight, right, with the stop loss. For example, let's just say in a different case scenario, let's say I was taking this trade and it looked really good, and what I would do is I'd probably get involved here, and I'd put the stop loss probably there, just above, right? Let's not say it was 6 pips, let's say it was 10, but that's how I would do it. And then what would happen in some trades is it would come up, tag me out, hit that liquidity and sell. So I had to slightly make that refinement, and just kind of give myself that additional space. And then when I made that shift, things started to change dramatically for me. So I think there's this leeway period where when you're getting better and better at trading any strategy, you start to try refining it and getting a little bit tighter just for the risk reward and this and that. But what you're actually compromising in the long run is keeping yourself in these trades. Now, I think one of the things that you want to be doing is kind of just your survival rate. And it's how many trades do you take that you actually survive in, not how many are you correct in, but you should usually be in that stage where you're correct 8 out of 10 times usually, right? Or at least as a minimum 6. But as a strike rate percentage, I'm usually right, like quite a lot, which is quite good. Obviously not coming from an ego perspective, but coming from a data perspective. And the fact of the matter is, when I was looking at the data, I realized that there was a lot of trades that I could have just stayed into had I just not compromised my risk reward and gone too tight, or gone to the minimum of 10 pips or whatever. So for those reasons, I had to make that adjustment. And then the second adjustment was just kind of believing in myself, because I now had the data to back up the consistency of my trades, and I could see that I was recognizing and reading the charts really well, and being able to just really take advantage of the emerging markets, right? So anything that was developing, I was really understanding, and I was running very much in flow with the charts. However, the problem for me I was facing was I just couldn't execute, and it was something that I was just a little bit not really self-aware of in the moment, because I would see it, but then I would convince myself that, do you know what, I won't take it because I don't want to set myself further back. So I kept finding an excuse, and when I looked at it, that is fully psychological, because the market doesn't care what you care about. The market does what the market does, and if you understand what the market does, then you have to trade with the market. You can't just trade with your opinion on something. Of course, there's levels of discretion, variabilities, there's confluences and so forth. But a lot of the time when you've built a solid trading plan and you've got everything in place and you can see these things, it then just comes down to just trusting yourself and letting the probabilities play out. The best thing that's going to come out of it, win or lose, is you're going to learn something major and you're going to be able to bounce back. The place where people don't really learn things from is they take loads of trades but they don't review them, and in this whole process a lot of the moving forward came from self-reviewing. If you're doing a break-even dance, you're actually in a very, very good position. The reason why I say that is because the reason why you're doing a break-even dance is because there's some major lessons there that you need to learn from in order to turn that break-even into profits. One thing that I was facing last couple months was I was kind of doing a bit of a break-even dance for around about 4 months, and the break-even dance was mainly because I was always just trying to aggressively take small profits. And it's very interesting because it's something that I've always been subconsciously being fed, is you need to let your winners run. And a lot of the time I wasn't. So what I was doing is, and it was because of a few trades that molded my experience in that moment, that then forced me to kind of make a change. That again was just something that I decided. It's not something that the market's telling me. It's something that I just came up with a conclusion that, you know what, let me try do this with small profits and accumulate the small profits and get there, because maybe about a year ago I did that and it worked for me. And I was thinking perhaps maybe that's the way forward, but in truth you have to trust yourself and give it time. A lot of the time I was lucky because the market just went within a short period of time. But if I go back to that Aussie 200 trade and we just have a look at this for a second over here, this didn't go for, okay, this one actually went pretty quick as well. This one here though, this one did stall for a bit. And it's in these periods here where you have to keep your composure. You have to keep your, and you might even ask, why did you not move to break even at this point when it was running 1.7, 1.8? And don't get me wrong, yeah, I could have moved to break even, but I was looking at the bigger picture, and the odds are, if this was going to really reject, then it's one of those ones where, okay, I was wrong. But the odds are we don't push up, create continuation just below this, push out, give a small consolidation, playing off the liquidity here, and then we don't commit. And we did get the commitment, and we were definitely driving into these areas, which was high probability. So that's one of the reasons why. So ultimately, I'd just like to obviously point out that self-trust is something so important, and it's something that I faced recently where I was lacking a level of just trusting myself in the moment to just understand that there's so much potential for so many traders, yet they just don't let themselves reach that. And I know it's a bit scary at times because you're not at that position where you have a lot of money, so your capital's on the line. For example, let's say, and I'll tell you this, right, I was doing a 200k assessment because I was funded 200k. Now I did lose that assessment, but the reason why I lost it wasn't because I wasn't technical savvy, I wasn't smart, I wasn't good enough. It was because the psychology I had behind the 200k, I just wasn't ready for it. I'll be honest with you. It was something that I realized quite late, like I think it was 4 months into the assessment, where I realized that I'm doing this dance, right? But when I looked at my emotional trade journal, I realized that it wasn't because I was bad at taking trades, I was this and that. It was, I would get emotional, I'd get very euphoric, I would get I would be very good to handle my drawdown, but there was times where I slightly over risked. Rather than taking the 1%, I took 1.25% or something, and I just wasn't really thinking straight, and I was just trying to close the gap. And trust me, I went up 5%, came back down to break even. I went down about 3%, 4% at a time, came back to break even, went up again to 5%, down to break even, and I kept doing this dance. When I looked at the trades were really good. The ones that kind of pulled me backwards were not very good, right? Because I was too aggressive with my stop loss. The positioning was good. The sequence it could be improved at that point, and there was quite a lot of little different difficulties that I faced, and I was just really focused on moving forward. And I think sometimes when you give it so much energy, when you really want it, sometimes you need to be doing the things that are going to get you there, not just the fact that you really want it. Because what I did was I actually noticed that there was a period where I took a trade every day in a week. And when I looked at every single trade that I took, they weren't all the best type of trades. Like, I was like, these are not the sort of trades that I'll be very proud of to kind of show scale to everybody on YouTube, right? And it was something which I found to be something that was a level of an accountability, because obviously what I show you on YouTube, I don't always show you every single trade I take, because there might be a period where I overtrade, and I might take an average trade, which is more of an experience play, right? Where, let's say you've got this level here, we're at the high value area, taking a trade here is actually high risk, right? Obviously in this scenario it's playing out. I'm just going to clear up the charts here because there's quite a lot going on. So it's obviously higher risk, but the case of the matter is, you're looking at this as its own little separate piece of price, right? You're looking at this as that, and there's no top, this and that, so you don't really know what's going on here. In fact, this could actually still be more of an ascending, and it's still channeling to the upside, right? There's so many variations of this. So in my personal trading experience, in my opinion, this is not really a good trade at all, right? Because yeah, there's kind of a base there and you're taking it, but really and truly it's like, what are we trading into? So we're trading back into all-time highs, and it's very risky territory, because what could have happened is this could have then just consolidated, created a bit of price action over here, that, and just dropped off, right? And then I've got positioned for a long maybe there, and I'm caught in the middle of it. So what I might have done was I would have probably taken a trade like that, with the anticipation being like, okay, no, I kind of understand this, and I'm just going to take the trade, and then I'll mitigate against something like that. And then when I looked at it, it was a 2 to 3, and I was like, hang on a second, why did I look at that as a 2 to 3? Because then I was looking at this as the 3 to 1, and I noticed a small little discrepancy like that. And this was like earlier, this was like maybe about 5 months from now. So I had to make that small shift again, and then there was like loads of little minor shifts that you will slowly make, and this is a part of your journey. You know, let's say right now this is your sort of journey, and right now you're just trying to get funded, so you're basically in this region here still. But in order for you to get to this point, being funded doesn't mean you're all the way up here. In fact, being funded is just one piece of the puzzle. In fact, there's loads of little parts to this, that this is all about. Okay, at this point here I learned risk management. Okay, great. Then at this point here I learned how to position myself. Great, move to the next step. Then at this point here I learned about sequence. Then I learned about you know, some other bits, and then you're slowly gradually making your way up. But then when you zoom out on that, it's very linear, right? And that linear doesn't mean, because, you know, at this point you may have still not made any money at all, right? But that's completely fine, because during this whole period here, you're learning all these incremental parts that in the long run, now you're looking at your life, you're actually still just over here. So I just wanted people to kind of zoom out on their perspective of where they are, because don't get me wrong, I'm a few years, more than a few years, I'm actually a decade into my trading journey, and the real fact is I'm still in this area here, right? Okay, I might have a lot of experience, I might have had a lot of things, I've had a lot of hurdles, and within here, you know, it's like very sporadic. Like, there was ups and downs, there was things I didn't learn, there was things that I was facing, and a lot of the time it's up to the individual how far you're getting in your own way, basically. If you want to really be, you know, scaling like this and really moving forward, and now at this point here you're funded, and then you're moving up, and then you've got your second funding, and then now you're like, you know, $500,000 up, and so forth. Like, these things are very possible, but you have to kind of understand what happened in this period here that led to all of this. Because if you don't build a strong foundation like this, then you can't anticipate something like that. If you don't build a strong foundation, then it can simply just go like this for the next couple years. And then within all of this, there was just some simple key lessons that you really had to learn to tighten this up, so that you could have then been very linear. And I'll be honest with you, I've been this person for a very long time. So speaking from experience here, in order for you to get from here to here, now is the time where you need to really be refining and building onto that. You know, there was a lot of testing, there's a lot of documents, I have so much data, I have so much skill set there, yet I was still hovering in this area. But it's all a part of your journey, because what I've done in this area is crucial for me to now have this linear growth. So I wanted to really point that out to you guys. If you understood that, great. If you didn't, I'm sure that, you know, it will all click at some point in your journey. The most important thing for you is to just really understand that, where do you want to make your money in this market? There's actually so much opportunity on so many different charts, right? Where you can make so much money. Like, I actually am so happy that I put in the work, because really and truly, like, it took me a few years to just get very good from just focusing on what I was doing, and a lot of it goes back to where I learned to trade from Falcon, from Mark, right? And I'll be honest with you, it's just because I showed up and listened, right? I've been in probably 95% of all the webinars, and if I wasn't in the webinar, I would have watched a recap. So I've basically been in 100% of everything that they've released. Now, if you're not in a position to afford it, then go do something so you can afford it, right? And I'll be honest with you, like, everything that I've learned has come from sources, right? It's come from testing. Like, at the end of the day, nobody just gave me all the answers on a piece of paper. They literally gave me the tools, they gave me the information, and they said, go off, study this, do that. And I think that is one of the reasons why I've been able to perform so well now, is because I went off to study and actually work really hard. Now, not setting high expectations or anything, because I'll tell you this, right? My game plan, and it's always been very clear, because I started this year with around about 90,000K funding. Then I grew it to around about just shy of over 200 and something K, right? And then at some point I sabotaged and I got complacent and I set myself back. And then I had to work really hard on myself. And you know, a lot of the time I was kind of telling myself, like, I need to improve this, I need to do that, I need to do this. And it's when I reassessed my goals and I set a really good goal for myself. It wasn't monetary, it was just more psychological and skill based. And I just had to start refining my skills, started going through the Rewide program every single day, just consistently, like a heavy hard monk mode. And I just kept doing it. And I said to myself, as a side effect from just doing this consistently, I'm going to be the person that I truly envision myself being. So I had to take the action and did that. And then as a result, I was able to tick off all my yearly goals now. Now, not only am I a six-figure trader, I'm able to actually keep that account because I have a very sustainable process in place, and I'm going to be able to scale over the course of the next few months to the years, right? Because I've built that skill set and the understanding, and I'm really determined to just kind of continue down that path because I can align myself with it. Now, I just want to let you know that there's nothing different about you and me. We're both people, we both have the same resources, we have the both same skills. Everyone can achieve what I've achieved. It's just you need to put your head down and really focus. That's the fine line difference. Now, if you feel like you're mentally immature and you can't do it, then that's something you need to work on, right? I can't help you with that. You can only help you. The answers that you seek are coming from within you, right? I can't give you the answers to everything. You need to go out and find them yourself, right? If you pray for patience, then you're going to be tested your patience, right? And that's a very interesting thing that I came across on a couple of videos on YouTube, and it was said many times, is if you really want to get good at something, like you want to be disciplined, then life's going to test your disciplines, and you need to show life that you are disciplined, right? If you want to be patient, life will test your patience. And simple things like this, right? When I see a traffic light and it goes yellow, I'll stop. I won't try speed up and go past it. I know some of you do, but think of that as a test for your patience, right? To sit there, wait when you know you could have gone, but you decided to wait patiently because it's safer, and then you waited for it to go green, and then you passed the traffic light when it was safe and you knew that it was better. Simple practices like that, weirdly enough, will translate into your trading, right? Many a times I've seen the amber light. Let's say this is a bit on a lower time frame and we've seen the amber light and we just had the simple first little retrace there. Now, is it risky? Yeah, because let's say we had a near miss there, right? But then let's say eventually it came back up and light went green, and then you took it and then you had the next green light and so forth, right? You'd get positioned in a much safer place, and then you'd be able to get involved and actually really enjoy that run. But a lot of the time we're trying to get involved in the amber zone. So just a simple sort of food for thought there, but I just wanted to kind of express that because that was some of the major takeaways that I could kind of just share with you today. Ultimately, it was not really much of a technical video. It was just more someone just kind of passing on some advice. Obviously, once again, I have been kind of in the shadows, just really putting my head down, really focusing. And I think it works better for me sometimes to just really do that. But as always, I'd love to share value and kind of just help you guys. And if you have questions or you want to jump on a call or anything, I'm more than happy to. Obviously, at the end of the day, I'm in the same position as you guys, where I'm just in my journey. But ultimately, I think even for yourselves, you have to realize at one point that you need to get very serious with this and you want to get really good. Just clicking the trigger isn't going to help you. You know, sitting by the charts, this is something that I've kind of learned. If you have to have a purpose when you're by the charts, and the purpose can't be just to watch them. Okay, if you're sitting there looking at the charts, you're opening yourself up to potentially executing a trade. If there's no trades available and you clearly know that at the beginning of the day, why are you sitting by the charts all the time, all day? You're just putting yourself at risk of execution. This is something that has kept me out of so many trades, and also something that I've learned about myself to prevent me from over trading, right? Is don't sit by the charts unnecessarily if you don't have purpose. Like, I'll sit by the charts if I need to make a YouTube video. I'll sit by the charts if I'm studying something specific, a particular pattern, particular flag, particular sequence, whatever it is, I'll be studying it. Then I'll leave the charts, I'll document it, do all that stuff, great. I'll come do my analysis, that's it, done, finish, set my alerts, and then I put my speaker on, and if the alert rings, then I'll come over to the charts and deal with it. But the rest of the time, I'm enjoying my day. And you need to see yourself as, when you are completely, let's say, very successful, you're making a decent amount of money, like let's say you made 100,000 this year, and you have a life-changing sum. The odds are you don't want to just be sitting by your charts all day. You might be like, well, I want to go do something, right? And believe it or not, actually, I actually made the majority of this. I passed my first phase while I was traveling on holiday. I was at a spa, right? Coincidentally, I mean, I didn't trade while I was sitting in the spa, but you know, while I was traveling, I was able to really analyze and take advantage of it. As I got to the hotel and I knew I had a few hours, I was able to execute and take some profits. But ultimately, I just want you to understand that you can make these adjustments, but no two traders are going to be exactly alike. Whereas some traders, they haven't built the mental ability to trade whilst they're traveling. Some people, they don't like it because it kind of just really makes things difficult. But when you've done it a few times and you've kind of understood it and you kind of, you know, feel comfortable with it, you can take advantage of stuff like that, right? It doesn't stop you. It doesn't mean that because you're now in, let's say, Dubai, for example, or, you know, Italy, doesn't mean that you can't just not trade. Like, you want to stay consistent with everything. Like, honestly, there hasn't been a week that went by unless I was extremely ill. I think there was 1 or 2 weeks this whole year where I didn't do a Sunday market breakdown. However, on the Monday or Tuesday, I did it, right? So it wasn't a fact of I just didn't do it. It's just I caught up with it, or I did do it, but I put less on board because I knew that I couldn't give 100. I could only give like 60 or 70, but then I understood I'm not going to be executing. Again, it comes into experience. There's loads of things that when I looked at my trades, I was like, an average trader who even trades the same strategy, they wouldn't see this trade. But I see it because of experience. I see it because of knowledge, and I see it because I've seen it multiple times. Now, I'm not carrying one trade into the other, but honestly, like, it's phenomenal. It's so phenomenal. Like, I can't express it enough. I don't think there's enough words in my vocabulary for me to articulate what I really want to express right now. But I'll be so honest with you, like, you guys will get there, right? You just need to stay consistent and follow the process. It could take 4 years, but honestly, in 4 years, 2 weeks of them 4 years, everything can change for you. Within 3 months, within a year, everything can change for you. So if you're going to put your head down for 4 years and work your ass off like I did, then it's so worth it. Like, I can only vouch that hard work, dedication, consistency, perseverance, resilience, all of this stuff, sacrifice, it's all worth it, right? There's so much in there that just you alone can achieve. But without accountability, it's very difficult. So it's very good to find other people like-minded to get accountability to move forward. It's always good to do it alone. Yes, you do your hardest work in solitude, but at the same time, it's always good to kind of have people who bring you up around you, because there was times in my journey where I hit a brick wall. It was very difficult. I lost an assessment. I lost a bit of money. I felt miserable. I was like, shit, man, this is just not working. Should I just give up? No, of course you're not going to give up. Like, what are you giving up on? You're giving up on everything that you've been trying to create. You can't give up. You can't go and work in a. Just realized the video cut off, but it's completely fine. You literally can't give up on anything, I was basically saying. And ultimately, there's just, listen, at the end of the day, there's going to be hard falls, but you're going to look back on them at some point in your journey. And you know that you're going to look back on it and you're going to be like, okay, you know what? Let's get back, let's do it. And you've done it many times, right? You just need to keep repeating it. Now, what I wouldn't advise is just keep jumping into assessment after assessment after assessment. Now, it's not the thing that's going to make it for you. You're going to lose a lot of money in the process of that. What's better is that you build your consistency on some level of capital, right? Where you can take a lot more trades than just, 10%. Right? Okay, fine. If you take an assessment and you trade with a very small percentage, fine, whatever, right? But you need to trade with something that's a little bit more tangible, but also you want to start experiencing payouts and things like this. You don't want to be giving it too much power, because what's going to happen is when you pass your assessment and your verification, if there is one, then you're going to then be very excited for the payout. So you're going to be very, very like anxious, this and that, and that's going to seep into your trading. So you want to just build the mindset, right? It's all about the mindset, and that's what I'm really getting at here. If you don't focus on your mindset, then everything else will crumble, right? It doesn't mean that you can't be technically, you could be technically amazing, you can read the charts, you can be very fluid, but if you don't work on the mindset, then it's pointless. Really and truly, it's very pointless, because you'll make some money, you'll lose some money, and you most likely will lose all of it, and then you'll come back and forth, and then you'll just be like, what is going on, right? And then it will always lead you back to mindset. So if there's a major takeaway, right, and obviously I'm setting goals for next year, and I might make a video with some of the goals that I've set, but more than important, one of the biggest goals for next year is actually, more mindset related now, because for the past few years it's been very technical, very, drill down on this, that, and there's been mindset involved in there, but not as much. So moving forward, it's a lot more mindset, and I think if somebody else is setting goals here, and it's weird because some of you might set monetary goals, like, I want to get a Bentley, I want to get this, and I did do that at one point, but those are not proper goals. Those are achievements for doing the things right. What you want to really be setting is, I want to be very good technically, I want to be able to have very good entries, I want to have very good timing, I want to be very precise, I want to see consistency in my trades, I want to be, finding my sweet spot of trades. These sort of things are goals, because you can achieve those, and it's not the only thing stopping you is you. So it doesn't mean that, because, for example, if I set a goal, and I have done this before, if I set a goal like I want a Ford Mustang GT 86, red, black, whatever, these rims, this speed, etc. Okay, great, I've got a detailed goal there, I want to achieve that, but where's your actionable steps? How are you going to achieve it? I can't just set a goal and say I want this, right? It doesn't mean that I won't get it. Perhaps maybe the universe, somehow I might get it, but the thing is, what are you actually doing to get you there? Like, we know that as a formula, if you get good at trading and you can consistently make profits in the market, and you've built a skill where you've worked on your patience, your discipline, your capital preservation, executional mode, all of this stuff, like, you've worked on many different layers to it, and you've now built that experience and you really understand it. If you go off now and you make 30, 40, 50k, or whatever it costs to get that Mustang, you're going to get it, right? But you're not going to get it because you wanted a Mustang. You're going to get it because you did everything else, and that translated into you being able to have those things. And that's something that I think is extremely important, and you need to shift the mindset to be thinking like that. The goals that you want right now, for those people who are trying to become consistent, shouldn't be those Mustangs and things. Like, obviously those are things you want, which is completely fine, but don't anticipate to just achieve them straight away. What you want to be doing is just getting very good with your technicals, being very good on your psychological side of being patient, building that patience, building that discipline, and having daily practices, having a routine, again, when it comes down to routine, because I get asked this question a lot, you don't want to make it complicated. You know, you might see people doing all these hundreds of things, right? Morning routine, I do, you know, press ups, I go to the gym, I do cold shower, I do, you know, I go for a run, I do this, I do that, I do journaling, I do affirmations, I do, you know, all of these things, I do technicals, I do all of that stuff. Like, it then gets overwhelming. You need to build your own routine. Everyone's routine is slightly different and changes over time. My routine is very, very simple and it works very well for me because I've refined it and worked on it for a long time. Now, in the summer and in the winter, it's slightly adjusted, okay? But how it works is wake up, first thoughts. I just run through some affirmations, affirming some things to myself, visualization, boom, straight out of bed, go to the bathroom, do my business, wash my face, you know, have a shower, sometimes cold, sometimes not, get myself prepped. In that moment of the shower, become very intentional. In the whole process of being in the bathroom, I'm very, very intentional. I'm speaking to myself, I'm in my mind, I'm gearing up for the day, pushing my motivation up. Then I get over to my office, and first thing I do is I play some uplifting music. Sometimes alpha waves, sometimes I play some binary beats, sometimes I play something a bit different, right? And I do log that stuff because I see what gets me into a very good flow. Then when I get into office, I do my analysis and stuff. Sometimes, you know, I might wake up a little bit later, but just because I did the evening forecast the day before, and you know, I just know that I'm not going to get up so early because it's nothing that I'm really looking forward to. So I might get up a little bit later, which is completely fine as well, because when I'm saying a little bit later, we're looking at a difference between 5 a.m. UK to roughly around about 7 a.m. UK, roughly in that leeway period. I'll take my dogs for a walk and maybe come back, do my analysis, or sometimes if I wake up extra early, I'll do my analysis before taking the dogs, right? It varies. And then I'll come back and I'll do it very peacefully. You know, sometimes I say to myself on a Sunday when I do my Sunday market breakdown, because it's slightly different on a Sunday, right? I don't need to wake up at 5 a.m. on the dot, but sometimes I do, right? The body wakes up when the body wants to wake up, right? I give my body the rest that the body wants, right? But I have the discipline to get up when I need to get up. And that's what I've learned over the years, is that because my day starts the day before. I plan the day before. In fact, I plan the week in advance, but I plan at the beginning of the week and then the day before, and then I see my trade shaping up. That's the one I'm taking. I'm going to wake up early, or I'm going to stay up a little bit later. I'm going to do what I have to do, right? You make these sacrifices, and if you see, it's not really a sacrifice, it's a part of your identity. Like, you've created this identity for yourself that you're a very successful trader. What do very successful traders do, right? And if that's one of the traits that they do, then that's what you do. So something to just really point out there. And another point that I wanted to really say is that you're fully capable to wake up at any time you want, right? Your body clock is more powerful than an alarm clock most of the time, right? A lot of the time I'll tell myself, I don't even have an alarm set, I'll tell myself I'm going to wake up at this time the night before, and what happens? I wake up at that time. Maybe I'm conditioned that way, maybe I've trained myself that way, who knows? But the body is very, very capable, okay? So just wanted to point those little bits out. Another point that I wanted to really say is evening routine, right? Evening routine is how you end your day, right? You don't want to end your day literally all the time on your phone. Like, okay, if you use your phone once in a while, great, cool, no problem. But you don't want to build negative habits. You want to get good quality sleep. Now, the reason why I talk about quality sleep is because when you go into that restful mode, right, you want to be in a zone where when you wake up you feel rejuvenated. You don't want to be feeling, and for those people who have had alcohol or maybe even smoke or whatever, you know how it feels when you wake up, or you've stayed up really late, right, and you went to sleep and you woke up the next day. You know how it feels to feel tired when you wake up, right? That's not a restful sleep. There's something wrong with your sleeping pattern then, and you can't be looking to work in your optimal performance if you're in that unrested state. You want to be in a very relaxed, calm, collected, very, very good state. Think of it this way: when you're a very successful trader and you're making a lot of money, or you've made a lot of money, you're not going to be waking up tired a lot of the time. You're going to be waking up well rested, right? You're going to spend your time going to the top spas. You're going to spend your time, having very good supplements, having very good quality food. You're avoiding a lot of the processed food because you care more about your health. You care about more about your longevity. And I think these are things that you need to start adopting now. A lot of people, they don't think about those things clearly enough. So then what happens psychologically is that they struggle to then align themselves with the version of themselves that they will be in the future. And again, it comes down to just knowing who you want to be, and that comes from a state of meditation, something that I neglected for a very long time. And when I did start meditating on it, I then had I went so deep, man. I was able to discover so much about myself, my identity, who I wanted to be, what I was trying to achieve, where I was trying to go. And once I got very clear on that, it was just phenomenal, absolutely phenomenal. So kind of just wanted to kind of point out on those things as well. I know there's a lot of psychological things here, and it's not really much of a technical video, but I think these points are just as crucial as they're just as crucial as anything, really. I think at the end of the day, for a lot of people, including myself, we tend to just kind of lose track of stuff. Even with routine, sometimes we fall out of routine, and I think a lot of the time people fall out of routine is because they get bored of it. I'll be honest with you, it's not sustainable. We think it's sustainable, but then it's not sustainable. And I think at the end of the day, what we want to be doing is we want to be creating sustainability within our processes and our routines. And how can you create sustainability? Well, keep it simple, right? Start with one or two simple things and then build on it, right? So I'm going to start my day every day, first of all, by waking up at a certain time. But you don't wake up with no purpose. You wake up and then say you get yourself refreshed. I'm going to wash my face. I might even have a skincare process, this and that, right? Have a shower, feel fresh, get my clothes prepped, wear nice clothes. Maybe if you feel better, iron the clothes, whatever. Do that stuff in the morning. Get yourself feeling in a good energy. Get yourself some nice headphones. Listen to some good music. If obviously you're disturbing people, if not, speakers are good. And then you've got that simple process. So simple. I mean, who couldn't do that, right? Who couldn't wake up earlier? Let's call it 5, 6 a.m. Doesn't have to be 5. Then goes to the bathroom, washes their face, does all the bathroom generics, shower, this and that. Then goes get ready, puts on clothes that make them feel good, and then they go and do their analysis, or they go and have some breakfast, make a coffee, go sit down, go do an analysis, set the environment. For those listening to this right now, something I'll just really say is look at your personal environment around you right now. If you look around in your room right now, how proud do you feel, or how grateful and how good do you feel when you look in your environment? Now, if some of you are looking at your room right now and it's a bit messy, like there's clothes on the side, there's something on the floor over there's something that you need to do. You need to do some hoovering, this and that. Well, I would say get to it, right? And the truth behind that is because you are a reflection of your environment. My environment, I try to keep it as clean as possible. Now, I'm not perfect. Sometimes I do, maybe throw a t-shirt on a chair on the side or something, right? We all have that chair or something, right? So I then have to break that habit, and I see it and then I clean it up. Then I'll hoover, then I'll make sure my environment's clean. Because at the end of the day, if you allow your environment to slowly get dirtier and dirtier and dirtier, what's happening is you're going to get slower and slower, and it's going to be a thought that's in the back of your mind that's going to then stop you from having a perfectly clear mind. Usually that thought is, let's clean this environment. This environment is holding me back. I need to, and a lot of the time people don't realize, like, you spend maybe a huge amount of hours of your life in that environment. Why not just make it really nice? Invest in your environment, make it clean, make it very peaceful, make it very very much you. And as a reflection of that, you're going to feel good. You're going to feel really good from just being in that environment, having it constantly clean. It helps with the way that you focus. Now, the reason why I'm just pointing these things out, because I've experienced it. I've had a dirty environment, I've had a clean environment, and I do my best work in a clean environment. I feel good, right? And the best part about it is if you clean it yourself. I know that sounds a bit mad, but it's a level of discipline, right? Keeping my environment clean is a level of discipline. And by me doing that, it's enabled me to get better at trading. And I know it sounds strange that, something like the green amber light, traffic light affects the patience, the cleaning the house and my office environment affects my discipline. I've got loads of different things that I do, daily practices, weekly, monthly, they're all there and they all work, right? And they've worked for me. Now if they don't work for you, I highly doubt it won't work for you, because I know it will work for you, right? Just try that, right? Because if those things genuinely were even better, like if they were there and you were still failing, I would understand, like, okay, there's another problem to address. It's not just your environment. But at the end of the day, think of it this way. If you've got a person who's constantly taking toxins like alcohol, smoking cigarettes, maybe puffs a bit of marijuana here and there, and then maybe eats a lot of processed food, this and that. Now compare them to somebody who eats very clean, has a very good diet, exercises, and does all that generic stuff that keeps you very healthy. Now think about how clear the individual's mindset is. Now, if you then throw into the equation, let's say that person who takes processed food and all of them junk foods and all of the toxins, he meditates. But then the person who's very, very healthy and does all the health stuff doesn't meditate, right? Whose psychology is going to be better? And I'll be honest with you, a lot of the time it would actually be the person who meditates, because they usually find a way to clear their mind. However, the person who's very clear-minded and he's eating very well doesn't mean they won't be successful. It just means that there's something that they could add on top of everything they're doing that will make them even better. So I just wanted to kind of really point out, because I think that's very crucial as well, is that it's not always about what you think, like cleaning the environment. That's not going to make you successful. Eating healthy, that's not making you successful. Those are just incremental added things that make you better. Like, yeah, sure, I take a bunch of supplements that help me with my cognitive thinking, my critical thinking, my memory, and so forth. You have full access to those too, right? And the fine line difference is I was willing to put myself slightly out of pocket and spend on things that I didn't know. I'll take the risk. I didn't know that they would help me. But as a translation is, I did those things consistently. I took them for a while and I kept my environment clean. I ate as healthy as I could. I drank, stayed hydrated, did all of this stuff. And as a result, I was able to then work at my optimal performance. And of course, I can always reach more higher optimal performances and routines and all of this stuff. And then I achieved it. So if that doesn't tell you that trying everything and anything you can to get to where you want to be can get you there, then I don't know what is. Because honestly, like, I put every single thing I could together and just did it, and then I just worked my ass off. And you know what, I'm going to continue doing it. Do you know why? Because this time next year I'm probably going to be trading maybe over 1 million, who knows. But I genuinely know for a fact there's no way in hell that I ain't going to be the best version of myself. Win or loss, doesn't matter. Funded account, no funded account, I'm always going to remain the best version of myself. And I want you guys to think of the same. You have to consider yourself as a winner. And you need to be doing what a winner would do, right? Be that billion, million, whatever trillion person you need to be. Dress the way you need to dress. Eat the way you need to eat. Sleep the way you need to sleep. Do all those things. And I guarantee it will make a big change. And then when you actually hit those goals and you're making that money, and then you message me and you're like, you know what, like, I did it, I'll be like, 100%, let's meet up, let's have a drink, let's do this, right? Because let's have a coffee, whatever. Like, at the end of the day, it's really about you and you just challenging yourself to beat the version of yourself that's stopping you, right? Because it's so easy to not let yourself be the best version of yourself. It's too easy. And that's a challenge in itself. That's life challenging you to get way out of your comfort zone. Do a whole bunch of stuff consistently that you don't even want to do at first, to only realize that this is all you want to do. Now that sounds, again, so wise, but I'm telling you, there's so much experience and truth in what I'm saying that, you know, I just want you to really understand that you can achieve anything you want. You just need to put your head down and really focus and just really go for it. It's not about the money. Just remember that it's not about the money. The money will come. It's about the version of you that you are now, and the version of you that you're becoming, and the version of you that you will be, that will get you everything that you want to achieve. And that's the truth behind it. So listen, this was one of the most wisest videos I probably sent out in a while, but do you know what, it had to be done. And I think probably only the consistent viewers and a few other people who've just come across it will probably watch this and get the message. But I hope this really sunk in and you got a lot of value from this, because really and truly there's so much opportunity in the market that you can't be sleeping on it, really and truly, right? Whatever imaging you have in your mind about trading is a scam, trading is this, trading is difficult, trading, it's not. You're making it difficult, you're thinking of it like that, you're projecting that energy. Trading is just trading. The market does what the market does, right? You can trade it. There's opportunity everywhere. You just need to understand how to take advantage of it, where and when you want to, okay? Sequence, positioning, all of this stuff that you've been taught and that you're learning, all of that stuff can really get you to where you need to be. You just need to really put your head down and focus and just get there, okay? Take your time, right? Slow is fast. Best words of wisdom I've received ever. Slow is fast, okay? It doesn't matter about trading 1% risk, 2% risk, 4% risk. You're not going to die tomorrow, okay? Unless you have a terminal illness and you need to be trading 2% risk and you've got about 500k in the bank and you just want to make $1 million before you die, fine, trade 5% risk, I don't care. You ain't in that position. You're in a position where you can build a whole life from start to finish, right? So trade small, man. You can make 10, like you saw, I made, what was it? Do you know what, this month, give or take, I've made around about just circa under 30%. Just under 30% this month, right? And alone, think about that. If I can make 30% in a month, you can make 30% in a month. Now, I'm not saying that you have to be a 30% trader, this and that, but I'm saying I've got to a level where I'm making on a consistent basis over 15% every month now. And I'm not saying that, some months I don't have a drawdown period. I have had drawdown periods in the past, and I probably will have one in the future. But the truth behind it is I can handle it. I've built myself up and I made a plan. So anyway, before I end this video, I just wanted to kind of tell you about my plan for the 100k assessment. So what's happening now is I've got the 100k. The 200k one, which was there, I've kind of left that one now, only because the psychological block that was with it. But what I'm going to be doing with this one is I'm going to be trading with a smaller amount of risk, okay? Now, does that mean that I'm not technically there? No, of course not. I think if I traded with 1%, I could absolutely do it too, but I don't need to. I'm trying to survive long game and I'm trying to build some money. This translates into $200, right? So the way I see it is, on a monthly basis, I don't really need a lot of money because I have a lot of money, right? Now, the reason why I have a lot of money is because I don't just trade. I'm into property, I'm into other things as well, right? I like to dip my toes into more investments because I spent years just kind of thinking about capital growth, right? So I have money, but I want to make more money. So I've got this. Now, what I want to do is I want to translate that into, let's say, 10%, right? So if I can make 10% out of that 200, then I'm looking at 2 grand on the first month or whatever, right? As a minimum. Now, realistically, I've got about 10k here, okay? Drawdown. Just saying. I've got 10k drawdown now. This is the position that you want to be in as well. All right, I've got 10k drawdown, and I'm trying to now take this, but I'm not trying to lose this. I'm trying to just make sure that I can keep this so that I can then make money, right? I'm using this as the bank, okay? I've now got 10k drawdown and I'm trading with 0.2% risk, and that's $200 per trade. If I make 10%, that's 2k, right? Great. One of these assessments cost about $500, okay? So realistically, if I make that 2k, I'll then put 1,500 aside and I'll reinvest $500 into another assessment, or a grand, whatever, right? Another 100, so then I have 200k accounts, right? I'll build that account up and I'll get that. Doesn't mean that I still won't be trading this, I will be, but I'll have that 100k. Now, with that one, I can then trade with 0.5% risk, which in lieu, I still have 10k drawdown, but let's just say I'm not merging them, I'm keeping them, right? I've got this as 20k now, 20k drawdown. in total, but it's 10 and 10 realistically, okay? I'm trading $500 risk. So if I then look at it, realistically, I'm trading $700 now. So it's $700 there as ultimate risk, but the fine line difference is I'm not trading the full risk of 1% on an account. I'm actually still trading 0.2% and I'm trading 0.5%. So I've actually got twice the amount of the average drawdown. So I've got about 20% drawdown on this. And then with this one, I've got maybe around about 40% or something like that, right? Give or take. So just wanted to kind of point that out. So the idea is obviously I'm keeping these accounts long term, but because I understand my strategy, I'm able to grow a lot longer, a lot faster now. Sorry if I've lost you here, but what I'm basically getting at here is that I've used the first account to make profit, to then reinvest into a second account, but I'm still trading the first account and keeping it small because this is my income. This is where I'm getting income from. The second one is basically an additional bonus to my first one, which stays as income, but the second one now becomes a little bit more higher risk, right? 0.5%. It's not much, it's double, but I'm able to then take the same trades, but increase the risk without compromising the first account. Because I'm always intending on keeping my capital. This is something that I wish I knew when I passed my first couple assessments, but I was too busy thinking about payouts, this and that. I wasn't thinking about it strategically and mentally. I've had way more than enough time this year to plan for this, to be in this position, and now I'm sharing it with you. So now what I'm going to be doing is I'm going to be taking that and I'm going to be additional risking and so forth. So yeah, pretty much at the end of the day, it's just going to add on to the account. So what you really want to be doing is making sure that you can build the original account. Once you have that original account, you'll be in a position to start doing it. It doesn't have to be such a large amount. It could be a lot less, but eventually you want to get to that point. Then you have, it doesn't have to be 100k, it could be 10k, it could be 5k. The same methodology applies, and you just keep doing that, and you'll slowly but surely scale in a very safe way, and that's how you can scale your capital up. Obviously, some of these accounts, they allow doubling and you know, it goes to doubles and goes up to whatever 120 and so forth. Whatever the scaling is, that's there as well. So just kind of understand that there's so many variations of the way that you can grow your account. You don't have to always be looking at one singular account to scale. Of course, it's good, you want to focus on one, but at the same time, with the resources we have now, we have copy traders and so forth, so they're really good. But essentially that's my original plan that I've kind of built up over experience over time, and I hope that kind of helps you, because over time, let's say that you have built multiple accounts and you know you're trading a certain amount, and with scale as well, you know, you take that times 0.25 at that point, let's say, on all of them, you're still trading overall 1% risk. So with that, then you're not risking a huge amount of your capital, but then as that translates, let's say that you make 5% in a month, that's still 5 grand, and you've done that with having very minimal risk, but you've worked really hard to obtain these. So kind of just want you to kind of understand that as an outlook, and then if you do fall into excessive drawdown, you don't have to use all of these at the same time. You can get them out, you can do 2 at once and get that out of drawdown, go back to break even, and then do the same vice versa. It's just you can get a lot more creative when you have separate accounts. That's why I'm not truly in the position to advise people on just merging their accounts straight away, because then you put all your eggs in one basket, and that's ultimately where you're putting all your risk. So if you go into drawdown, you know, you may not see money for a month or two to get out of that drawdown, whereas if you have multiple accounts, then this one might be in drawdown by, you know, let's say 3%, and then you've still got this one which is up by, let's say, 6%, and then this one's you know, vice versa, minus 2%, and then this one is up 7%. You know, it kind of just all works out in a way. So that's the way I'm kind of looking at it for now. But obviously you'll have some accounts which are bigger. You might have some accounts which are you know, 400k over time, and then what you've decided on that is you know, you can just grow. So you want to be thinking of it long term as well. understand how you're going to be doing it. And the idea is that you're not just trying to get rich really quickly, because the odds are if I traded with 1% here and I went into 4% drawdown, psychologically that would be a little bit daunting. Obviously, with the capabilities I have now, I know for sure I could probably get out of that sustainably, but at the same time, you've set yourself back a little bit and it's hard for you to then get back to where you need to be. So it's one of those things where I think really think about how you want to be growing your accounts, because even with 100k as an example, you can with 0.25% over a course of 3 months, you could make something like 4 grand over with 0.25, right? You could probably make 4 grand with 20% over 3 months or whatever. So at that point there, you can reinvest that. And if a 100k assessment costs 500, you could take another one easily and keep moving forward. So just wanted to kind of point those little things out to you and kind of expand the way that you're thinking, to think that you have to be trading larger to get larger amounts, because obviously we want them 20k 40k payouts, but they will come eventually. What you want to be doing is you want to be doing it sustainably and in a right way, so that you're not over risking and you're not putting your capital at risk, because you want to protect your capital, and this is a great way to do it. So guys, I hope you enjoyed this video. I hope you found a lot of value in it, and if you have any questions, please drop a comment below, drop a message to me on Instagram. I'll be more than happy to get back to you. Look forward to speaking to all of you, and catch you in